Hello traders, welcome to the end of the day wrap up for March 9th, 2026. After an absolute bloodbath in the futures last night, we found a bottom at 65.84. I'd mentioned that we want to see a fair value gap heading up, pull back, hold, and then continue to rise after that. That's what we got, and it continued to go for the rest of the day. One of the things that we want to keep in mind, although I am looking for this to be the start of wave 5 to the upside to complete around 70.61, it could still flip back around and want to take out the bottom and clear out all the stop orders. You have a bunch of stop orders below 66.40.75. And then you also have a bunch of stop orders right below that 65.85 area on the ES futures chart. But for now, we'll continue to look for upside momentum, targeting 70.61. If you've seen the 15-minute trading video I posted, I used the 30-period exponential moving average on a 15-minute chart as my guide. I wait for it to pull back into that 30 before I take a long trade. Now, if it closes below the 30 and the 30 starts acting as resistance, I'll watch it heading down to see if it closes back above the 30 and then start to re-enter those longs, but keeping in the back of my mind that we could head down and take out that pivot at 65.85 and clear out those stops. It's not out of the question. Typically, March and October are turning dates in the market. If you go back and look historically, for some reason, March and October is when the market likes to turn. If that's the case, then we would probably see the uptrend continue to somewhere around the October timeframe. But timing is really not what I look at. I look at more structure and Elliott wave. Looking here at the daily chart, we can see the nice bullish hammer formation off the lows of the overnight. That gives us another clue that the bottom could possibly be in. So with that being said, we'll continue to look for longs until otherwise noted. Here's what I did today. Keep in mind that I trade very small. Trading is not my only job. I've been in the market trading since 2006. I typically trade 1 to 2 micros and target 10 points or so on each trade, keeping my stop loss at around 10 points. And then as the trade progresses, I'll move that stop up, try to get to break even. But one of the main things that has saved me throughout my career is having a daily loss limit, which for me is $300. If I hit that limit, I'm done for the day. My strategy is obviously not working that day, and it's not me, it's the market. So having those daily loss limits and sticking to them and having the discipline is what's going to separate you from the average trader. Because all trading is the patient taking the impatient's money. So when you have your strategy, you have your max day stop loss, you have to stick to it. I trade 3 $50,000 prop accounts, and the trailing drawdown in those accounts is only $2,500. So although I have $50,000, I really only have $25 per account. So $300 is a comfortable loss. If I lose that $300 and I'm done for the day, I come back in the next day instead of letting it go to $500 or $600, because when you get on tilt is when you're going to do the most damage to your trading account. So stay disciplined, stay safe. Thank you for watching the video. If you want more updates, please hit the subscribe button to get my next update. Thank you. Bye-bye.